Hey everyone, Tom here. Today we'll be talking about the latest stock market news, as well as our technical analysis thoughts on the S&P 500, Nasdaq, Dow Jones, and Russell 2000. It's been a while since we revisited the Russell 2000 and Dow, and I think all of them coming together using our top-down approach will show you why the market likes to wait for critical levels ahead of news. And we certainly have a lot of news this week. Stay tuned. So I'll just begin this video by talking about some of the key dates that I think everybody should be looking at this week, whether you're a trader or an investor. Of course, on Wednesday, being the July the 29th, we have the printing press, Jerome Powell, coming out to let us know his thoughts on the markets and the economy right now. I would like to note that this has generally been a negative kind of thing in terms of how the markets react to the discussions that Chair Jerome Powell talks about. He kind of acts a little bit negatively, but of course then the policies have been the positives for the markets. On Thursday, we have the GDP, which may be kind of crazy. We've talked about that before. It is certainly expected to be terrible. Let's see what it comes in at. It may be fully manipulated. We don't know. And then on July 31st, we have the technical deadline in terms of what's going to happen with Congress stimulus. Now, the Fed, Jerome Powell, has basically said, hey, Congress, can you do the next stimulus? We're kind of out or tapped a little bit right now. We've done what we can. Can you do the next one? So what do I expect on this? Well, I think a few people in the comments had it right. And this is why I love everybody posting in the comments their ideas. Effectively, I think pretty much we're not going to see July 31st be the decision. They'll probably squabble and fight about it, and it will go over the weekend, and then at the 11th hour, some decision will be made. This could mean there's risk on the weekend for holding positions, and possibly that forces some traders and investors to think about selling their positions into the weekend. Definitely something that could happen, and history would tell us that's usually how Congress acts in terms of these events. I just want to reiterate as well, have your earnings releases and know which one is coming out. This week is everything. We've got Facebook, we've got PayPal today, we have Shopify and Spotify this morning. And then of course on top of that, we have the AAAs tomorrow on Thursday, Amazon, Apple, Alphabet. The AAAs are coming out, and this will be the hottest anticipated earnings release day during this season. This is really everything. We've talked so many times about how the big FANG stocks have been riding the market in terms of the S&P 500 and what's happening. So definitely watch out for Thursday and today, and be very well aware of how those companies report. If there's certainly a problem with ads for Facebook and Alphabet, that could change sentiment just like that. So be watching. So let's get into the technical analysis and talk with everybody about the Russell 2000. It's been a while since we featured this on the channel, but of course the Russell 2000, which is the smaller companies, the 2000 smaller companies, really shows us what's happening in terms of sentiment in the markets, in terms of whether the stimulus is getting to the smaller shares. Well, this index went as low as under 1,000 during the crisis, and of course it's come all the way back up to around 1,470 or 1,480 zone. This has acted as previous support before, so what do we expect it to act as on the monthly? Of course, resistance, and it's hitting that 20 moving average. So all of the zones are really saying, well, we're back at the area, but we're struggling to get past this area without further stimulus or further help in the markets. When we go down to a daily, I think it becomes more apparent why the market likes to hit critical levels. So if we bring this down a little bit, on the left-hand side, you'll see resistance around 1450, and you'll see how the market is starting to sell off, coming down to this level. I wouldn't be too surprised if it comes down here and previous resistances act as support in role reversal, which is what we talk about all the time. And then at this level, we have some kind of news event, and it either bounces up and does the lightning bolt action moving forward, or it closes under here, tests the trend line, tests the 50 moving average, and underneath this zone would really further signify a lot of bearish momentum. If this happened and it came all the way down here, you certainly would be seeing a huge amount of bearish sentiment coming into the markets. So for now, the Russell 2000 is really showing us that there is weakness there and we need stimulation from either the Fed or from Congress. If we do a full 180 and we go and have a look at the Dow and we just focus on the daily here, it's already really on the critical level. We always do weekly kind of recaps on the market moves ahead, and we talked about the Dow, and really we're at that resistance point where the resistance will now become support. We've got a 20 moving average, which is the red line exponential. We've got a 200 moving average, all on the daily, very important time frame, and a key trend line just underneath that with a 50 moving average. It almost looks the same as the Russell if you were looking at the two charts. It's almost spooky how close they are, considering this is the top 30 and the other one's the smaller caps. But these all signify key zones. We either see that lightning bolt action moving forward, which signifies back into kind of the highs, at least up here at the 27,200 or all the way up. Or we see no stimulation, we see weak kind of earnings results out of those big companies, and then it comes down here, tests the trend line. If it gets under there, lots of selling coming in, potentially all the way to the 25,000. So very key points on the Russell 2000 and the Dow right now. But as we mentioned, really it's about those 5 companies. The sentiment of everything relies on the FANG stocks and the Nasdaq. So the Nasdaq has been the achiever in terms of what has been moving up and what has been doing well. I want to really break down the monthly here though, just to show you how extended the Nasdaq is. So here is a Bollinger Band on the Nasdaq, and basically this shows you whether a market is pushing kind of the limits of the general zone or the range, or whether it's extending past that area. And usually a market won't be able to stay outside of the top end Bollinger side or the standard deviation for too long. Here we've had 3 consecutive months. So we've got that 1, 2, 3 consecutive months where it's been pushing on the monthly above the Bollinger. And usually this is kind of unprecedented. It did happen over here, but before that, we didn't see as much extension through the Bollinger, and that usually kind of brings it back in. Right now, we're seeing that rejection off the 11,000, and it looks like the Bollinger is going to potentially close down. Remember, we're on the 29th in here in Australia of July right now. The monthly is going to close in just a few days, and if it comes down and it closes underneath this standard deviation, this will be a very bearish candle. It could even become something like a bearish shooting star if it sells off enough. So very kind of interesting zones here on the Nasdaq ahead of this Federal Reserve, Congress, and big earnings reports. When we break it down to the daily, it becomes even more apparent how many things are going on here. We have a bunch of different divergences up the top here. If we put different indicators on, you'll usually see divergences though as you get higher highs. They won't often be doing the thing that basically is showing the indicators continuously strengthening. So I don't put too much kind of effort into doing that, because I find that the price action is still going to be key for you whenever you're looking at it. But in our weekly analysis, we talked about the 10,500 being key support. We talked about this trend line here at all the lows kind of coming through, and the 20 moving average. So all of those are being tested ahead of news, ahead of the earnings reports. And if it breaks below this, it will signify seriously bearish movement. On top of just the double top pattern, which is the distance between the resistance and the intervening troughs, that would basically direct us this kind of distance. If it got under there though, where would it be going? Well, this is effectively showing us that it would go back and test previous peaks before the crisis. But I like to use things like Fibonacci as well to get a bit of an idea where zones could go. So one of the things I like to do is to get a fib retracement, take the distance, and then figure out whether there's any zones that make sense to Fibonacci's off the move. So this is the whole pull here on the Nasdaq. One of the key zones I've spoken about is going to be that 9,800 area. We're going to have a 200 simple moving average, and if it did continuously move down, there would be so much buying here, it would be crazy. There's a few reasons for that. One reason, if we hit 9,000, what does that mean about the market? The market would be off 2,000 points. A bear market is generally considered after it moves under 20%, so at least 20% under the market. Usually that's where you see a huge amount of buying in, because not often does a market actually go into a bear market, and we saw what happened this time. So there'll be a huge amount of buying if this ever was to occur, and I would expect it to be that real serious dip Will it get there? We have no idea. At this stage, we're just knowing that we're at a critical point ahead of news. And it's one of those times it may pay to be actually waiting if you're looking at trading the market in either direction, because we're just at such a critical point ahead of this news. So as a quick midweek update on the S&P 500, I think it's worthwhile just mentioning quickly this monthly. The monthly is still remaining underneath any previous close. So we're basically still testing body closes here at around that 32.30. We've been up and down around anywhere from 0.3 to 0.5% really this week so far, and that's just because everything is waiting for those big bits of news. When we dial it down into the weekly, we can see here that we're still really just testing this resistance. There hasn't been too much bullish momentum this week coming off that little shooting star candle here, and we're just testing that resistance zone. If we break it down to a daily, it really shows us the same kind of story. Not much movement on the key role reversal area ahead of news. So where previous resistance becomes support is really where we're at right now. And it all comes back to, again, waiting that big news. So will we see lightning bolt action moving up, or will we see lightning bolt action moving down? I'd say this, in my opinion, it's one of those times it's very difficult to either pick either way because of the nature of everything that's coming out and the implications of each one of these big moves by the Fed and by Congress. But we're certainly at that key zone. So just as a lesson for today, I guess the best thing to do would be to always know that whenever key bits of news are coming out, generally the price action will gravitate to a key level of support or resistance. We've seen that a lot during this crisis whenever we've gone almost bearish in terms of the technicals, which we're even getting close to on the Nasdaq right now. The Fed or Congress have stepped in with some type of information. That's why it pays to really follow the price action and follow the trends rather than to preemptively kind of say, oh, I think that's going to happen. Why not just trade what is happening? So right now we're at that key critical zone. I hope everybody is positioned well. If you're in long term and you're waiting for 10 years in a hold of stocks, I don't think you need to worry too much. But if you're somebody that does trade the markets, it does make a difference being patient sometimes. So remember, have a plan, and of course, make sure that your plan is easy to be implemented. Happy trading, everybody. Remember to subscribe and like the video if you did enjoy it, and we'll see you tomorrow with another video. Good luck. Bye.